Is it fair to assume then that you'll be able to scale back some of the purchase program in June, given what you just said about the economy and the fact that actually medium term it could get better?
I think my definition of the medium term is a bit different from the one you are mentioning. Medium term for us is a couple of years, and it actually fits with the hope for recovery. In other words, the return to pre-COVID-19 situation, which we estimate at probably mid-2022. What we have decided most recently is to significantly increase our pace of purchase. And this is a decision that we have made in view of the circumstances and with a view to preserving favorable financing conditions. We will reassess in due course on a quarterly basis and in between as well, of course, to make sure that our monetary policy is in line with our overall price stability objective, but also with the aim that we have of preserving favorable financing conditions, which, as I said, leads to more certainty, improves the confidence, hopefully induces consumers to consume and investors to invest. And this is what we are beginning to see, actually.
But, Madam President, the ECB bought an average of 20 billion euros under its pandemic program over the past 2 years. Is that what investors can also expect in the weeks ahead?
As I said, we're not guided by a fixed amount. We're guided by a very determined objective, which is preserving favorable financing conditions. When we looked at the whole situation, this is what I have identified as a holistic assessment. I know that people find this word very funny, but it's deliberately intended to cover the entire financing conditions available on the markets. And when we looked at those conditions a few weeks back, we observed that there was unnecessary, unwarranted, and premature tightening of those conditions, which led us to determine that we had to significantly increase our pace of purchase. We are very attentive to these financing conditions, from upstream to downstream, meaning that we look at the risk-free interest rates, we look at all the sovereign bond yields, we look at the credit terms that are available for consumers, for investors, for corporates. And then we determine on that basis whether we should adjust one way or the other. Because don't forget, given the exceptional situation that we are facing, we are using maximum flexibility when we deploy PEPP. We will deploy all of it or not, or more. And we will certainly adjust as needed, depending on these financing conditions that we monitor and that we evaluate very carefully.
But as the economy recovers, bond yields will rise. How will you determine what's warranted and what's not warranted? How difficult is it to determine?
What we observe at the moment is yields that have increased quite significantly and quite rapidly. And this is what has guided our most recent monetary policy decisions. The next worry when yields rise because the economy is picking up, because consumers are consuming, because investors are investing, and because hopefully there will be a bit of price pressure exercised on our economy, then we will assess what is needed. But let me tell you this, given the distance relative to the aim that we have, which is inflation, I think that it's going to be quite a while before we actually have to ask ourselves whether we need to tighten at all.
What's quite a while? A couple of months, or could it be longer?
That is something that will be determined by our observations of facts, of prices, of indicators. And we are not going to be guided by the short-term movement, because we know that in the short term, inflation is going to rise. There are some technical, temporary factors that are going to lead to upward price pressures. That is going to be caused by multiple elements, whether it's the German VAT increase, whether it's the rebalancing of weight in the inflation assessment basket. But we're going to see through that, because those are not sort of underlying fundamental factors that will increase prices. in a consistent and convergent fashion. So this will be guided by observation of sustainable, solid movements, and by our aim, which is price stability as defined, and our commitment to economic players that we will preserve favorable financing conditions.